Curious what 2021 holds for the real estate market? Hey guys, it's Ashley Lazarian with Keller Williams Realty. I take my job of knowing the market very seriously, and I wanted to give you a couple of insights on the things that I think are key for what the real estate market is going to do in 2021. Let's get started. Now, I continue to get those that ask, well, aren't we too inflated in pricing? Is now a good time to buy? What about in 2021? Is 2021 a great time to buy? Anytime you have interest rates that are below 3%, it's a great time to buy because the amount that you're saving in interest alone is crazy. I don't know if when you purchased your home, you took the time to really look at the numbers that they give you, where over the 30 years, if you look at what you paid at the end, that very last number, it's a little hard to swallow. I personally, when I purchased my home, decided not to even look at that number because I hope to not have to pay that amount over the time, because I hope to pay it off before then, or maybe even sell, take my equity and buy something else. Experts are saying coming for 2021. I can tell you right here from Danielle Hale, who's chief economist at Realtor.com. She says that we expect home sales in 2021 to come in at about 7% above what 2020 was, and that's even higher than 2019. So experts are saying that we will continue to see sales continue and even grow in 2021. However, they do think that things will kind of plateau. We're not going to have those spikes like we did this past year in 2020, because we kind of plummeted to a halt and then we shot through the roof faster than anybody ever could have anticipated. So I think it's going to be more of a normal seasonal trend where you see your highs in the summer and then things taper off as school begins, and things will begin to just kind of play out evenly as they have in the past. Another driving factor for looking at the economy and how the real estate market is going to be trending in 2021 is taking a look back. Now, I'm sure a lot of you, like me, when the pandemic hit early 2020, kind of were listening to what all of the market experts had to say, and listening to them really predict another depression or even recession gave us great fear. But we have proved resilient and bounced back quicker than I think anybody really anticipated, especially with so many other things going on this year other than just the pandemic. So I wanted to read a quote to you that just talks about where we are with the unemployment numbers. So projected unemployment would be over 11% in December 2020 and not fall below 7% until the first half of 2022, a milestone already passed in October. So don't get me wrong, we're not out of the woods. We're definitely not jumping up and down at those numbers. However, it just simply shows that we are ahead of where we were predicted to be. And there are certainly people that have been in a very, very large hardship in 2020. They've lost their job, or they were definitely out of work for a substantial amount of time. Some of the smaller investors that maybe have one or two rental homes, if they were out of work, perhaps they weren't getting that income and might have to look at either doing a forbearance or over time might end up in foreclosure. We will see those come about. However, what people are not anticipating or really thinking about is that they will likely be absorbed by the market. What does that mean? So we are on such a shortage of inventory that when those foreclosures do come to fruition, forbearance did not work out for them, or they were not able to pay it back, and so they do need to go into a foreclosure situation. Once those come on the market, they will likely be absorbed by the market, by people that have not been able to find a home, and now there is a little bit more inventory. Still focused on those foreclosures. So I know I've gotten a lot of questions about forbearance. So for those of you that don't know what forbearance is, this is something that went into play in 2020 as obviously the pandemic hit. Many people either lost their job or were out of work for a substantial amount of time. And so we were able to allow those people to file for forbearance, which is basically just saying, I need to kind of put my mortgage on hold for a minute. and see what's going to happen with the economy. So if you look at these numbers, of the 6.5 million granted forbearance, 2.2 million have filed for an extension. So we have to kind of give these time to see how they are going to play out, but we definitely want to keep an eye on these for sure. Now, if you look back, now 48% filed for forbearance, but they didn't even need it. They didn't use it. So what that says to me is many of these people took it out of fear. They weren't sure what was going to happen with the market. They weren't sure what was going to happen with their job. They weren't sure just what to expect. So they took it as a precaution, and they realized that they didn't need it. So if you look back, the gray bar here shows active owners that are in forbearance, meaning there are 434,000 people across the country in discussion with their lender that are currently getting help, whether that's paying their mortgage back over time or getting just some sort of assistance with that, but they are in constant contact with their lender and they're working it out. Now, these last 116,000 are what we really need to watch closely. These are behind, and from what we can see, they're making no effort to extend the forbearance or work something out with their lender. So these are the ones that we most likely would see as a foreclosure. These are the ones that are most likely going to come to fruition down the pipe, so to speak. Look, bottom line, the market is still searching for information. Believe me, I wish I had some crystal ball I could stare into and get all of the answers. But with everything going on, a lot of changes being made, we're just gonna have to sit tight and see how everything plays out.